At the Sprott Natural Resource Symposium in Vancouver, the Investing News Network had the chance to speak with Byron King, editor of Whiskey and Gunpowder at Agora Financial. Here's what he had to say about the gold price.
I'm going to start you off by talking about gold. We had the Fed hand down its decision on rates today. Where are we at with gold?
The Fed came down from Mount Olympus, lowered basis points by 25, a quarter point. Everybody expected it. It was the headline of the New York Times, the headline of the Wall Street Journal. They could not have not done it, but they did it. And gold promptly sold off by 17, 18 bucks an ounce. It's buy the rumor, sell the news. That's the immediate daily issue. Long-term, gold is not, shall we say, fully priced. Gold does not reflect the inherent value. Gold has plenty of room to move upwards in terms of its use as a monetary metal. What the Fed is doing, in a broad sense, is competing with the rest of the world who've already lowered their rates, and so this is sort of a race to the bottom in terms of how low can we go interest rate wise, and so expect to see globally negative interest rates, much more so than we already have. There's already some immense number, $13 trillion or something, of negative bonds out there. People give you money, and then later you give them back less money, not even interest. It's just, you give me your money, I give you back your money, but I give you back less money, and this is legal. I don't get that. When negative interest rates hit the United States, I think that the American mentality is going to be such that all these tens of millions of people who know nothing about gold are going to become interested in it like overnight. That's how fast it'll happen. But I think that the big monetary issues are set up for a real run with gold. That's the big macro picture.
Do you have any specific price outlook for this year or further into the future?
Well, it's in the 1400 range now, which is July. I think that gold's an easy move to 1500 by the end of the year. There are people with more optimistic, more ambitious numbers. I could see gyrations. I could see price excursions or what have you. But I truly don't see a big wipeout like we had in 2012, where it went from 1,900 bucks down to $1,000 bucks. I don't see anything like that.
If as an investor you feel encouraged by that, what's the best way to play gold right now?
Well, if you have no gold, no physical gold whatsoever, get some. Coins, little bars, what have you. It's up to you. Find the right dealer. There's plenty of people out there that do that. The companies that tend to do really well early in the gold cycle are the royalty companies, and you've seen it in. I'll name a few names. I mean, the big one is Franco-Nevada, or Sandstorm Gold is a nice one. Metalla Minerals is a small one, but they're growing, and so the royalty guys are really good because they're plugged into the mining community, but they have no operational risk. They don't run mines. Their big operational risk is that the mailman won't deliver the check that they're going to get. So the first people to benefit are the royalty guys. Then you've already started to see the big names. Barrick, Newmont, Yamana. Those guys. They've all made their move. For the really deep value, though, the ones with the multi bags, that's where you have to start to get into some of these Canadian juniors, and that's much higher risk but much higher return. And we're in a room full of very well run, very impressive Canadian juniors.